Hey traders, welcome back to Your Nifty Guy. I hope all of you are doing well. If you trade Nifty regularly, you already know that not every day is about big moves. Sometimes it's just about being prepared the right way. In today's video, I'll keep things simple. We'll look at the overall context, clear out the noise, and focus on how to approach tomorrow with a proper plan and a calm mindset. No predictions, no hype, just a structured way to think about the next trading day. Right, I got extremely late from work today and recording this video very late. So it's close to 11:30, and I guess it will be midnight while this thing goes up and live. So I'll keep the video extremely short today. First, we'll be discussing what happened in the markets today. What did we do? What was the approach? What was going on in the mind? Right. So yes, I had changed certain levels during the live market, and I have before visit starting the video, I have set them preset to what the levels were in yesterday's video, and so that I'll explain exactly how and when did I change those levels. So yeah, so today markets opened with a gap down, right? Markets opened with a gap down, immediately saw some recovery, and the only trade that I could look here was either a trap setup or a continuation setup, right? Now, out here, markets did not give us a bearish closing below yesterday's low. It did breach yesterday's low, but then again came back up inside the range. And so the trap setup was nullified and right. Had we got a bearish closing below this and then the high of that candle would have been taken out, we could have taken a trade on the long side. Post some sideways action, markets came down, gave us the closing that we needed below previous day or below yesterday's low. But then again, from here, what I was planning for was a continuation trade, which could have been a good trade if we would have gone back below this particular swing. So this was the pullback that we got. Then, but market has a unique way to surprise you guys when you least expect it, and that is exactly what Nifty did today. Out here, out of nowhere, formed a good double bottom and went up way above the day's high, right? And it went up in a good momentum without any significant pullbacks and making it practically untradeable for someone like me, right? I will not be trading random entries. Like it is a double bottom, but then it is at a random place, right? Out here, what you are looking for is a short entry if that happens, if at all that happens, right? With a pullback. The pullback did come in, but then again, it was a reversal, right? It was not just a simple pullback, but it was a good reversal on the charts, and it's okay, perfectly fine if it does not uh, go ahead with your setup or with your set of rules and you do not participate in it, right? So this is something where you need to control and not let FOMO get the better of you so that you don't uh, get into the wrong trades. It's okay if it does not fit your setup or your plan. You simply let the market go wherever it is deciding to go, right? So this is exactly what happened here. I do not know if anybody of you capitalized on this double bottom reversal trade. If you did, let me know in the comments. Now, post this particular move, again, markets gave the structure had changed, right? So if you look closely, the structure out here changed into a higher low and a higher high structure, which is a bullish structure. And as we approached these levels, right? So this is the level that we had drawn on the charts yesterday. But in the live markets today, this level had changed for me, right? I'll quickly show you. This was the high, and this was the low of yesterday, using which we had drawn this particular level, right? Now, this level held true until and unless this high and this low is intact. But then at the start of the day itself, the low was breached. And that is the reason why we need to adjust our levels in the live markets. I have explained it to you guys multiple times. And yes, so this is what I once this particular swing low was formed and market started retracing, I updated the level Just before the video, I went back and drew the fib with yesterday's high and low and put the level back so that I can explain it to you guys easily. Right now, as you can see, market with a bullish intent approached our level, took a rejection. Do we short the market? Absolutely not. Right? There's also this particular trend line which was coming in, right, from where market was simply taking the lows were being formed at this particular trend line. Out here, try to understand how I approach and look at the markets in the live market. So till about here, if you can see, the structure is a clear higher high, higher low, right? And we know that we have reached a good resistance level, which is a fib level. Out here, we need to wait for the market to change its structure. So this is where the first lower high was formed, right? But then a simple lower high does not change the structure. For the structure to actually change, we need a lower low as well, which formed out here when this particular swing low was. I'll just simply delete this because this will be confusing you. I just drew this to make sure you understand the structure. So this was the first lower high which was formed. And when this swing low was taken out, this is the the first lower low as well, right? So now the structure has changed. We have taken a resistance from our fib levels. Now, if anybody who is into uh, trading double tops at a resistance, I also do it, but then structure also matters to a lot to me, and that is why I waited for the structure to formally change. A well-planned entry could have been at the break of this particular green candle low as well, with a very small stop loss, right? Extremely small stop loss, and as you can see, it was a great risk-reward trade. But then I personally did not enter today's trade at the break of this particular swing because a lower low had not been formed yet. And after this particular lower low, I wanted market to give me some pullback. And out here, if you look, this is the area where market was sideways for quite some time. It had a one inside bar, good green and red candles, showing that okay, there is a tussle going on between buyers and sellers, and being on the being with the market structure, which had recently changed from a higher high to a higher low structure. This break of this was the entry with a stop loss right above this particular swing. So I had entered this particular trade at the break of this particular swing at 2 o'clock. Now the entry was late in not in terms of spot, but in terms of the options, right? So options, because you are actually trading Nifty on the options chart. So, and once you observe the price action, the difference in the price action of the spot and the option, you can try to understand a couple of things, right? So while the low of this particular swing broke in the 2 o'clock candle, just go and observe any in the money put option today. Uh, the simultaneous high, because we are buying a put, simultaneous swing high on the put was broken in the 155 candle itself, right? Now, I want you to understand and talk to yourself, talk about why this is happening, right? So, stock market and trading is simply all about demand and supply, right? When the demand is high, the prices push higher, and that is exactly what we were seeing in the put charts, right? Even though the spot had not yet broken down below this on the put chart, the puts had already broken up above it, right? And that was the reason when but again, I waited for some good confirmation and I entered only when this particular candle low broke. So that is the reason I said it was a late entry for me. I exited somewhere in this candle, right? And I captured around 20 odd points, not a lot, but then again, it's a fair game trying to keep in mind that Indian markets are behaving in an extremely volatile way currently. And there are reasons behind it. There are macro reasons you need to study a lot about them to be able to clearly understand. But then, yes, Indian markets. are extremely volatile. I speak to a couple of subscribers on a daily basis from the channel, and people who are new to the markets and people who are having little bit of less experience, right? A couple of months to maybe a year, are finding these markets to be very difficult, very disturbing, very uh, extreme levels of volatility, right? And that's perfectly okay, right? So because for me, I who has spent a lot of time with just one chart in my entire trading career, most of my time has been spent on this particular one instrument, which is Nifty 50. Uh, things are clear, not clear right now. Sorry, things are not very clear right now, and there is uh, actually a lot of volatility, and that is the reason why I have been asking you guys to keep it low and slow, right? So I hope today's price action was clear about how we adjust the levels in the live market depending on how and which swings were we taken into account while we planned the trades and how those levels, the new levels which are created in the live markets, change those levels and how to actually trade using structure. And then also a psychological point about missing some very good massive trades. Being an option buyer, this would have been a lovely trade. Try to understand if I simply put the uh, long tool out here, right? Stop loss is this. And even if you did not capture the entire move and you captured only till around this particular swing high, it was a good 1 is to 4.5, 1 is to 5 trade. And if anybody would have done this, it was a good 1 is to 6 trade, right? With a very small stop loss. And missing these trades, like not being a part of these trades, looking at the option call options actually blasting through on such days might take a toll, but then this is exactly how you should be able to control yourself and not let FOMO kick in and actually wait for markets to come to you before you commit to the market, right? So this is what I preach exactly in all of my videos. You just need to stay calm. If it's gone, it's gone, right? Uh, so I hope today's price action is very clear. We closed exactly where, almost exactly where we closed yesterday. So overall, in today's market, markets did go down, went up, went back down, but then we have closed at almost the same level as yesterday. So again, the option selling experiment that I am still doing in a very relatively smaller account is today's was so I had executed the trade yesterday, and I executed the trade while markets was around 25,900 and around 815. Uh, it has got a great amount of decay, right? So that is something which can be used as a passive income tool for people with a bigger capital size. More about that later. Let's plan the trade for tomorrow. Right, so today, like we said, we got a good enough candle out here. Now, there are two theories which I've been speaking about on each of my videos is about on the daily time frame. If we have to go up, right? So we are still in a lower high, lower low structure. And if we have to go up out here, we need to form a good, because this is a good weekly time frame fib support. We need to form a good double bottom out here. And then maybe if we have to continue upwards, or in case if the structure is going to continue, this is going to continue. We are not predicting anything, but we are simply preparing ourselves for each and every scenario that can be played out, right? So this is where uh, we see. So we are actually, if speaking, we are at a critical juncture right now, right? Let's see what the market has in store for us. We will go with our mantra of not predicting, but be prepared for anything and everything. For tomorrow, we don't need this level. This fib level has kind of done its work already. We don't need this. So structure is still bearish. These lows hold a lot of importance. We are actually trading near the lows, so break of these lows will trigger a good move on the downside as well. But if we move back above the 25,900 mark, right? So this is coming as a round figure, round number, as well as a good double bottom again forming on the 75 minutes time frame. So yeah, that 25,900 is a good level to look for long entries. But again, this is a level just to keep in your mind, and we'll simply be preparing our trade plan based on today's price action. So because we are near yesterday's low, right? Uh, the structure on the daily time frame, we have not still got a reversal candle. I'll try to keep Friday a very light trading day, but then again, out here, if this low, or maybe just give me a second, guys. I think so. Although speaking of structure, so this is the 15 minutes time frame. We are still waiting for a lower high, right? Again, this move came in a one short rally, and if we were till about this point, we were in a lower high, lower low formation. Out here, this low had broken down, so we created a new lower low. A lower high can be created somewhere around here, and then maybe we continue down. So that was the reason why I drew that fib level very, very close to it as well. So yes, out here, if we open flattish, right? So this fib level will also be showing us that any negative or bearish price action around these levels, we need to go short. Above this, I will look for some trade, sorry, some trade on the long side because that will be again the structure trying to change, but still will be in between these two bigger swings. And the real move on the long side, if we have to play, like I said earlier, 25,900 levels is something that we need to keep an eye on, right? This is where we plan a good trade because these levels are also coinciding with a good double bottom on the 75 minutes time frame. Needless to say, below this, I will be looking for a short entry, right? So today was a decent day. I will not say it was a bad day. It was a decent day, and tomorrow can be good, and we might get some clearer views also based on the weekly closing. You're not supposed to look at week. Is it not? Not supposed to is not the right thing, but ideally we should not until the week has closed. So yes, based on tomorrow's, maybe we see some reversal, or maybe this goes down and we have a negative or a reversal candle on the weekly as well, right? So if we are at 25,815 odd levels, and the low of previous week is 25,700, so 130 odd points. And if we manage to go back and give us a closing below this, so this will be a reversal on the weekly time frame, which is a higher low, sorry, a lower low, lower high, and a closing below previous week's high, right? So tomorrow will be a crucial level. So we'll stick with our simple plan, right? So this is what we have planned, and we will be sticking to it. So yeah, that's it for today, guys. Even though I thought that I'm recording the video late and I'll keep it as short as possible, it is probably one of the longest videos, but then nonetheless, a video I believe which is very, very important because it has got a lot to learn from, especially with regards to market structure and how to change those dynamics in the live market. So yes, that's it for today, guys. Remember, the goal isn't to trade every move; it's to show up with clarity and discipline when the opportunity actually comes. If this video helped you think more clearly about your approach, do hit the like button, subscribe to the channel if you haven't already. It really supports the channel. And we'll come back tomorrow with a fresh perspective and a clean plan. Until then, stay patient, stay focused, and remember, consistency is built one well-planned day at a time. I'll see you guys tomorrow. Till then, trade smart, trade safe. Cheers and thanks for tuning in, guys.